A warm good afternoon to one and all present here. We welcome you all to Zen Tax Talks 43, awaited Supreme Court Judgment Safari Retreats. We will be having the speaker, Mr. C.A.P. Paul Thangam sir and C.A.P. Aravind Thangam sir. So people are joining. We will start the session in another few minutes. Thank you.
Good evening to all. We welcome you all for this 43rd edition of the Zen Tax Clinic webinar. It is a great pleasure to welcome you and then see you all for this interesting topic on the recent judgment in the case of Safari Retreats. This is a long-awaited judgment of the Supreme Court. So the basic controversy is regarding the ITC for building construction. See, the construction activity and then sales tax or VAT or service tax or now even GST has been a contentious issue in case of a building construction. So the same continues, and then some clarity is coming with regard to the ITC with regard to building construction. So the primary question in the case of Safari Retreats was whether ITC can be taken. So I should give you some of the factual background. Safari Retreats is engaged in construction of a mall. So for the construction of the mall, they will be purchasing items like steel, cement, electrical goods, and engineering fees and everything. For that, they will be paying the GST. Safari Retreat says after constructing the mall, they will let out the premises to various parties. So whether the ITC on these items can be adjusted against the rental income. So that is the question. So the matter went to Orissa High Court. Orissa High Court read down that provision. What do you mean by reading down that provision means? You have to read the law as if that provision is not in that act. So in such a way, the Orissa High Court read down the provision. So when it read down the provision, it means it is beneficial to the assessee. So there is a restriction under section 17(5) of the GST Act with regard to ITC for works contract, and for if the works contract is not given, if the GST assessee himself buys the materials, then he can take the ITC or not. But the statute forbids taking ITC for both these items as a works contract and if he buys on his own account. So the crucial question was, there is a definition for plant and machinery. There are two clauses are very, very important. Clause 17(5)(c) and then clause 17(5)(d). 17(5)(c) deals with the works contract. Then 17(5)(d) deals with the registered person himself buys these materials on his own account. But in 17(5)(d), the words used are plant or machinery. 17(5)(c), the words used are plant and machinery. GST Act, there is a definition for plant and machinery. So whether both are denoting the same or not. So that was the crucial question before the Supreme Court. So it is a very, very wonderfully drafted judgment. The contention on behalf of the assessee, the person from Tamil Nadu, the leading advocate, Aravind appeared. On the other side, ASG, Mr. N. Venkatraman appeared. Both argued in a scholarly manner this judgment. It is just like reading a crime thriller. Okay, what will be the end result? So what the judges are going to say after going through this erudite scholarly argued case. So that was the important issue that is going to be discussed by Aravind. My son Aravind Thangam. Not Aravind Datta. Aravind Thangam will be dealing with this. So in this, one of the important words that is used by the judges is very, very useful for the professionals here. So how to present the case, that is very, very important. The judge in the initial paragraph, he says, voluminous record has been given. So commenting on that, I should quote the exact words of the judgment. Brevity is the hallmark of good advocacy. Sometimes Sometimes bulky compilation and submission can be counterproductive. That denotes in any forum, your submission should be very brief and then it should be easily understandable. So these are all the words I find it is very, very useful for the professionals. So with these words, let me hand over the entire proceedings to Aravind Thangam, who will be dealing with the judgment in detail. And then it will be very, very useful for the trade and industry in general. And also for the factories and everything, what constitutes a plant and everything he will be discussing. Thanks. And now it is over to Aravind Thangam.
So very good afternoon to each one of you. It is extremely a pleasure to welcome each of you to this 43rd session of Zen Tax Talks. So there has been a very recent judgment of the Honorable Supreme Court on one of the most important topics of today's scenario, that is with regard to whether as a company am I eligible to claim input tax credit on my building construction. So building construction is an activity that has been undertaken by various trade and industrial institutions, and as a part of it, the question has always been that, can I claim the input tax credit? So answering this question, we have this very important judgment of this Honorable Supreme Court, and that is something which we are going to start discussing now. So is my screen visible, sir? So is my screen visible? You can put a thumbs up there. So we can be very confident that the screen is now visible, right? So thanks for your response. And now we have the screen here, ITC on building construction, the Supreme Court judgment of Safari Retreats. So civil appeal number 2948 of 2023 and 2949 of 2023 have been the civil appeals given the appeal numbers of the Supreme Court, which is an appeal made by the Chief Commissioner of the Central Goods and Services Tax and others against the order made by the Honorable Orissa High Court. So this is not an appeal preferred by the company, that is by the taxpayer before the Honorable Supreme Court. The appeal was primarily filed by the department against the favorable order which was received by the taxpayer from the Orissa High Court. So whenever in this judgment, though for the purpose of today's discussion, I might not be using the words as the appellant and the respondent, I will be very safely using the words the assessee and the other side, the department or the revenue. But whereas when you read this judgment very beautifully, it uses the words appellant, which refers to the department or the revenue perspective, and the respondent is actually in this case the taxpayer. So here this judgment is a 91-page order, and I'm very sure many of you would have gone through the order received through the social media of WhatsApp, email and various LinkedIn sources. So this beautiful 91-page order, if you read through it, if you really decipher the meaning of this 91-page order, it can be segregated into these various categories. Though not actually given as titles or headings in the order per se, this is the categorization which we have made to simplify and to understand and to communicate as part of today's discussion and to understand this order in a better manner. So paragraphs number 1 to 5 talk about the facts and the background. Paragraph 6 is a very beautiful paragraph which our senior partner CFP Paul Thangam, my father, also explained about the importance of brevity. Serial number 7 to serial number 13 talking about the submissions of the assessee. Serial number 14, paragraph number 14 to paragraph number 16 talking about the submissions of the department. A gist of the rejoinder filed in paragraphs number 17 to 22. Paragraph number 23 talking about the reply to the rejoinder. Paragraph number 24 is the most important paragraph, where the Supreme Court drafts the questions which it wants to answer. Say, for example, in our previous Zen Tax Talks webinar, we have discussed about the forum of authority for advanced ruling or the appellate authority for advanced ruling. Whenever it is before the AAR or the AAAR, we have to draft the question which the authority has to answer. But the case is a little different before the Honorable Supreme Court, where the Honorable Supreme Court themselves, they draft the questions or the issues which they want to consider or clarify. Paragraph number 25 is a very beautiful paragraph which gives us professionals the guidelines of interpretation of a taxation statute. How a taxation statute has to be interpreted, and also very clearly lays down the guidelines for the department on how at all the taxation provisions have to be interpreted. To what extent the taxation provision has to consider in a very liberal manner, and where it has to be read in a very theoretical basis. 26 to 30, they have captured the relevant provisions of the Act, the various relevant provisions starting from Section 16, Section 17(5), and all the various relevant provisions of the Act. Then comes the analysis of the legal provisions. Paragraph number 31 to 41. These 11 paragraphs have a very detailed analysis of these two clauses, 17(5)(c) and 17(5)(d). In paragraph number 42 to 56, we have the very detailed interpretation of the term plant, or to say the meaning of the term plant or machinery. Then whether at all the 17(5)(c) or 17(5)(d) is constitutionally valid has been discussed in paragraphs number 57 to 62, 63 and 64, slightly touching upon in only one of the paragraphs about the validity of Section 16, subsection 4, dealing with the time limit for input tax credit. 65, the answers to the questions framed, and 66 is the order for the specific appellant, which is for safari retreats. 67, 68 talking about the general guidelines and the order. So this is how the entire 91-page order can be segregated and understood. And as Father rightly remarked, it's a very beautiful judgment. It's like watching a movie, or as Father rightly remarked, reading a crime thriller. What is going to be the result of this? But if you want the climax of the entire answer, you just have to read para 24, which has framed the questions or the issues for consideration, and para 65, which has the answers to it. Single line questions, 3 questions mainly which have been answered, 3 answers, 3 single line answers, and the entire judgment is over. But it is about understanding why and how this judgment has been derived, how that inference has been made, what is the actual reading or the interpretation of the entire provisions of law. So that is what is going to be the journey of today's discussion. So understanding how the answers made in paragraph number 65 have been derived is going to be the discussion for today's session today. On the very brief outline, facts of the case goes to say, the assessee is engaged in the construction of a mall for the purpose of letting out of malls to different tenants. This fact has been very beautifully brought out by Father at the time of preliminary introduction. The assessee used vast quantities of inputs, services, materials for the construction of malls in the form of cement, steel, aluminum, wires, so many other materials, including engineering services, other services, are all used by the assessee for the construction. The accumulated input tax credit on account of the procurement of various input services and capital goods was to the extent of rupees 34 crores. Therefore, the SSC went before the Orissa High Court. Orissa High Court, a beautiful order, 20th paragraph of the order. It's also a very detailed order. Para 20 of the order of the Orissa High Court. This is the order of the Orissa High Court, which said the provisions of section 17, subsection 5, clause D is to be read down, and the narrow restriction as imposed reading of the provision by the department is not required to be accepted in as much as keeping in mind the language in a specific case law. The very purpose of credit is to give the benefit to the assessee. In that view of the matter, if the assessee is required to pay GST on the rental income arising out of the investment on which he has paid GST, it is required to have the input credit on the GST, which is required to pay under 17(5)(b) of the CGST Act. Very simple. If it is for rental income, the Orissa High Court went on to say that on the investment made, despite the provisions existing in section 17(5)(d), it has to be read down and input tax credit will be eligible for the assessee. So this was the conclusion derived by the Orissa High Court, and against which the department or the revenue went on an appeal to the Honorable Supreme Court, and now hereupon all the other forthcoming slides are only and only talking about the order of the Honorable Supreme Court. So, Honorable Supreme Court, as Father has rightly remarked in para 6 of the Supreme Court judgment, right? It has been very clearly noted, very detailed submissions have been made by the parties to the civil appeals, interveners, and the parties to the writ petitions. We find that the submissions made by the learned counsel for the assessees and the interveners are repetitive. There are large number of decisions relied upon, whether relevant or irrelevant. As Father rightly remarked, brevity is the hallmark of good advocacy. It would be ideal if parties on one side file joint written submissions. The judges and lawyers are human. Sometimes bulky compilations and submissions can be counterproductive. So this is the exact wordings from paragraph 6 of the Supreme Court judgment, and to very simply say brevity, that is to say the state of being short or quick. So that is the meaning of the word brevity. And I will say this 91-page order, though it might look to be a very detailed order, this order is very short, very quick, to the point on what has been raised in the various appeal petitions. So I would definitely appreciate the judgment, the way it has been really crafted. So whether the decision is in favor of the trade or industry in its entirety is a subject matter that we would discuss today, but the way in which it has been beautifully articulated, brought out, and in a very simple way, the judgment has been derived is a very beautiful aspect to be admired upon. So let's just get started now on the legal provisions. Before we touch upon the judgment or the interpretation, the judgment has completely read only these relevant provisions. That is the very relevant provision of section 17, subsection 5, clause C, clause D, along with 2 relevant explanations. So section 17, subsection 5 starts with the wordings to say, notwithstanding anything contained in section 16, subsection 1 and 18, subsection 1, input tax credit shall not be available. So, in certain situations, input tax credit is not available, and that is what is provided for in section 17, subsection 5. In a very simple terminology, we call the list of entries in section 17, subsection 5 as block credits. So, entries in section 17, subsection 5 are not eligible for input tax credit, though section 16, subsection 1 goes to say input tax credit shall be eligible on all inputs and input services, on all inward supply of goods or services. So any inward supply of goods or services is eligible for input tax credit under section 16, subsection 1, but section 17, subsection 5 starts with the wordings to say, notwithstanding anything contained in section 16, subsection 1. Therefore, this will have an overriding provision, and that has also been discussed as part of the judgment. 17(5)(c) goes to say, works contract services, when supplied for construction of an immovable property, other than plant and machinery, except where it is an input service for further supply of works contract service. 17.5d, goods or services are both received by a taxable person for construction of an immovable property other than plant or machinery on his own account, including when such goods or services or both are used in the course or furtherance of business. Explanation to the word construction is available. There is an explanation to the word plant and machinery. Two explanations which are relevant for the interpretation of section 17.5c and 17.5b. Very important thing that the entire judgment has read down or interpreted is section 17 subsection 5 clause C. There is an exception after the usage of the words construction of an immovable property. In both 17.5c and 17.5d, you can note that there is one common aspect, which is construction of an immovable property. And after that, there is a bracket, and within the bracket, it uses the words other than plant and machinery. Section 17.5c uses the word other than plant and machinery. Section 17.5d uses the wordings within bracket other than plant or machinery. Plant or machinery. There is a very substantial difference between the usage of the term plant and machinery and plant or machinery. So this difference has been the very changing factor in this entire judgment, because the term plant and machinery is a defined term under the explanation after section 17.5 or section 17.6. There is a very specific explanation for the word plant and machinery, but whereas for the term plant or machinery, there is no definition. This has been the very beautiful interpretation of this entire judgment. So, para 24 of the Supreme Court judgment, as I have already explained, has framed the issues for consideration. That is, the Supreme Court has drafted the questions on which they would like to clarify. Three questions framed. Number one, whether the definition of plant and machinery in the explanation to section 17 of the CGST Act applies to the expression plant or machinery used in 17.5d. That is, whether plant and machinery and plant or machinery are one and the same. Number two, if it is held that the explanation does not apply to plant or machinery, what is the meaning of the word plant? And the third question, whether 17.5c and 17.5d, and also to a smaller extent, section 16.4 of the CGST Act are unconstitutional. Because the Odisha High Court has already went on to say that section 17.5d is unconstitutional. So that also needs to be very importantly discussed by the Honorable Supreme Court, and these three questions were framed for answering by the Honorable Supreme Court. Beautiful of this entire judgment, as I already told you, for the professionals and for the department and everyone to understand, interpret any provision relating to tax. The Honorable Supreme Court in paragraph number 25 has brought down 12 clauses. 12 clauses which are now going to be the mantra for how we read a provision in a taxation law. Clause A. A taxation statute must be read as it is, with no additions and no subtractions, on the grounds of legislative intendment or otherwise. Whatever is there in the law, you need to read it as it is. No additions, no subtractions. Number one. Number two, if the language of a taxation provision is plain, the consequence of giving effect to it may lead to some absurd result is not a factor to be considered when interpreting the provisions. Something is plainly said. Just because it is absurd, the court cannot really say or change what is actually said. Something is plain, it is absurd. Yes, it is absurd. But if it is to be changed, it is for the legislature, that is the parliament, on the recommendations of the GST Council, in the case of the GST law, to step in and remove the absurdity. But the court will not come to remove any absurdity in the law. That is the interpretation rule number 2. When dealing with the taxing provision, the principle of strict interpretation to be applied. The interpretation has to be strict interpretation. If suppose 2 interpretations of a statutory provision are possible, the court ordinarily would interpret the provision in favor of a taxpayer and against the revenue. This is something which we would generally think. Whenever there is some ambiguity, we will always say the department will err on the side of the revenue. Could be a stand of the tax department. But whereas when it becomes before the court of law, the Honorable Supreme Court has very beautifully brought down this interpretation that even though there could be 2 possible interpretations, it would ordinarily interpret in favor of the taxpayer and only against the revenue. In interpreting a taxation statute, equitable considerations are entirely out of place. It is not required that it has to be that department and the assessee are equal. No. A taxing provision cannot be interpreted on any assumption or presumption. I assume this should have been the intention of the legislature. I presume this is what it means. No assumptions, no presumptions. A taxing provision has to be interpreted in the light of what is clearly expressed. The court cannot imply anything which is not expressed. Moreover, the court cannot import provisions into the statute to supply any deficiency. If there is a deficiency in law, the law is not good. Yes, the law is not good. The court cannot import any provisions to make it good. Law is not good, it is not good. There is nothing unjust in the taxpayer escaping if the letter of law fails to catch him on account of the legislature's failure to express itself clearly. Law is not clear. Therefore, taxpayer is escaping without any payment. That is not at all a problem. It is not unjust. That is the way legislature has not made itself clear. Taxpayer escaping, perfectly fine. If liberal interpretation is manifestly unjust, if the interpretation is unjust, that is against the taxpayer, which produces a result not intended by the legislature, only in such a case the court modify the language. Only and only where it is unjust, then the court can modify the language, but otherwise, whatever is the legal provision, as long as it is plain, even though the taxpayer may be escaping the letter of law, it is perfectly okay. Equity and taxation are strangers, but if construction results in equity rather than injustice, such construction too should be preferred. That would be gross injustice. Therefore, I am taking an interpretation of equitable interpretation, then only it is okay, but not just for any other reasons. It is not a function of the court in the fiscal arena to compel the parliament to go further and do more. The parliament has left off some interpretations plainly. They are liberal. The court need not tighten it. The court will simply allow it, even though the taxpayer may be escaping from tax. When a word used in a taxation statute is to be construed and has not been specifically defined, and there is no definition in the taxation law, it should be interpreted in accordance with its definition in another statute that does not deal with a cognate subject. It should be understood in its commercial sense. So whenever there is no definition, these are some things which are very relevant for today's interpretation. and for also reading this entire judgment of the decision of safari retreats. So when there is no definition, take commercial sense. Unless it is defined, the words and expressions in a taxation statute have to be construed in the sense in which the persons dealing with them understand. Generally, how it is understood. That is, as per the trade understanding, the commercial and the technical practice and usage. So these are the 12 technical interpretation rules which the Supreme Court has beautifully brought out in paragraph number 25 of this judgment. And therefore, for any interpretation thereupon, any interpretation, any other case, we can always rely back on these 12 rules for interpretation, which will serve as the mantra. And even now, this judgment will also rest on this 12 mantras. The first issue, interpretation of section 17 subsection 5 in relation to section 16 subsection 1. As I have already told you, section 16 subsection 1 makes input tax credit eligible on all inward supply of goods or services. Section 17 subsection 5 starts with the wordings notwithstanding anything contained in section 16 subsection 1 and 18 subsection 1. Therefore, this is called as a non-abstent clause. A non-abstent clause has an overriding provision over the other provisions of the law. Paragraph number 30 of the Supreme Court judgment very beautifully captures this provision to say section 17(5) begins with a non-abstent clause. A non-abstent clause is a device which is used by the legislature that is usually employed to give an overriding effect to certain provisions. And therefore, they go on to say that in cases covered by section 17 subsection 5, ITC is not available. That is the inference made by paragraph 30 that input tax credit is not eligible for the items contained in section 17 subsection 5. Though section 16 subsection 1 provides input tax credit on all inward supply of goods or services, section 17 subsection 5 has an overriding provision and therefore it is valid. There is no question about it. Now, since 17 subsection 5 is valid, what is the interpretation between section 17 subsection 5 clause C and 17 subsection 5 clause D? As I have already explained to you, in 17(5)(c), it talks about works contract, where they have used the terminology for construction of an immovable property other than plant and machinery. Clause D uses the words goods or services used for construction of an immovable property other than plant or machinery. So, paragraph number 32 of the Supreme Court very clearly goes to say clause D of section 17 subsection 5 is different from clause C in various aspects. So 17 subsection 5 clause C does not allow something, that's perfectly okay. 17(5)(d) can allow it. Just because 17(5)(c) does not allow some things does not mean 17(5)(d) will also restrict in the same manner. 17(5)(c) is an independent provision, 17(5)(d) is an independent provision, and both are different. That is why there are itself two different provisions. If 17(5)(c) and 17(5)(d) are intended to be one and the same, then the legislature having two different provisions does not even arise. So 17(5)(d), if you really read, there are two important things. It talks about goods or services received by a taxable person for construction of an immovable property. So basically it talks about goods or services received by a taxable person for construction of an immovable property. For the time being, let us assume that wordings in the bracket does not exist. So goods or services are both received by a taxable person for construction of an immovable property on his own account. So what is restricted? When a person buys goods or receives services for construction on his own account. So when I am constructing for my own account, 17(5)(d), there is a restriction. So there are two exclusions out of it. There are two exclusions out of that own account. Entirely it goes to say on my own account. So when it is for my own account, I am not eligible. But when it is not for my own account, I am eligible to take input tax credit. Is that interpretation clear? When the construction is for my own account, input tax credit is outrightly not eligible as per section 17(5)(d). But where the construction is not for my own account, what is not for my own account, we will discuss now. But the interpretation at the first level is very simple, that where the construction is for my own account, 17(5)(d) restricts or blocks the eligibility for input tax credit. Where the construction is not on my own account, then I can take the benefit of input tax credit. Another exception is goods or services or both the construction immovable property, which is a plant and machinery, so which is a plant or machinery. Because what is inside the bracket is other than plant or machinery. If it is an immovable property also, if it is a plant or machinery, input tax credit is eligible. Because only when it is other than plant or machinery, then it becomes restricted, right? So goods or services are both received by a taxable person to construct an immovable property consisting of a plant or machinery is an eligible input tax credit. So under these two situations, input tax credit is eligible. So what is on own account? Let us solve the problem of own account first. See, there are two things. On own account, you are ineligible. Not on own account, you are eligible. So when you are ineligible, that is when it is used for personal use, not eligible. When it is used for a service, yes, it becomes eligible. If it is used by the person constructing as a setting in which the business is carried out. So when a person has constructed and that setting is where the business is carried out, that is also considered to be on own account. That is what paragraph 32 goes to say. When the construction is used by the person for carrying on his business, then it continues to be on his own account. So whenever it is on his own account, input tax rate is not eligible. But when it is not on the own account, intended to be sold or given on lease or license, then it is not on own account and then input tax credit is eligible. So this is what paragraph 32 goes to say. Whenever it is intended to be sold, yes, a builder is eligible to take input tax credit, number one. Number two, when it is given on lease or license. So these are the two situations where the Honorable Supreme Court goes to say, these are the two situations where it is not on own account. See, whether it is a plant or machinery is a completely separate subject. That is something which we will be discussing in the forthcoming slides. But even when it satisfies the conditions of a plant or machinery, when it is on my own account, input tax credit is not eligible. Paragraph 32 is very clear that it is only for, it is not on your own account. That is, when it is intended to be given on lease or as a license, you may be eligible for input tax credit subject to other conditions also being satisfied. So when we go for the other aspect now, so own account issues now very settled. When it is on own account, not eligible. When it is for other than own account, eligible. Now coming to the interpretation between section 17(5)(c) and 17(5)(d), we have para 34, which where again they talk about there is hardly a similarity. There itself they said there are many differences between 17(5)(c) and 17(5)(d). In para 34, they go on to say there is hardly a similarity between clauses C and D of section 17(5), except that both apply as an exception to section 16 subsection 1. Perhaps the only other similarity is that both apply for construction of removable property. That is very clear. 17.5C also uses the word construction of removable property. 17.5D also uses the term construction of removable property. But whereas clause C uses the expression plant and machinery, which is a specifically defined term. Clause D uses the word plant or machinery, which is not specifically defined. Right? So what is this definition of plant and machinery? Whether within the term plant and machinery that is used in section 17.5C, whether land and building can come within plant and machinery? No. Land and building is specifically excluded in the explanation to section 17 subsection 5, which says that means apparatus, equipment, machinery fixed to earth by foundation, includes foundation and structural support, but excludes. So plant and machinery excludes land, building or any other civil structures. Very, very clear. Land, building or any other civil structures is excluded from the term plant and machinery. Plant and machinery excludes land and building. Very clear. Therefore, in the case of clause C, 17.5C, which talks about works contract, if the construction is of plant and machinery only as defined, the benefit of ITC will accrue. That is, it should not be land or building or any other civil structure. So as far as works contract service is concerned, when a company, let's talk about a spinning mill, has received works contract services for construction of an immovable property, which is a land or a building, then it will be excluded from the definition of plant and machinery, and therefore input tax credit will not be eligible. Only if the construction is of plant and machinery. So construction is of plant and machinery means it is an apparatus, equipment, and it is not a land, building or civil structure, then only input tax credit will be eligible. But if it is under clause D, if the construction is of a plant or machinery, ITC will be eligible. So therefore, when they interpreted section 17.5C para number 41, the Honorable Supreme Court very clearly, based on the interpreting rules that they have already framed in rule in para number 25, have gone on to say we cannot add anything to clause C or subtract anything from clause C. Input tax credit is a creation of the legislature. Without GST Act, there is no concept of input tax credit. So input tax credit is a creation of the legislature. It is not something which is coming from the constitution. Therefore, it can exclude. So section 17.5C can exclude something, specific categories of goods or services from the ITC. Exclusion of a category of works contract by clause C will not per se defeat the objective of the object of the GST Act. Therefore, some exclusion from section 17.5C will not defeat the object. That is what has been interpretation of section 17.5C. Works contract was not the main point at all for discussion with respect to the case of safari retreats. It more so related to section 17.5D. 17.5D goes to say goods or services are both received by a taxable person for construction of immovable property other than plant or machinery. See, on his own account is all the other wordings we have already discussed. On his own account is a separate part of discussion. So with respect to plant or machinery, paragraph number 45 of the Supreme Court judgment goes to say the very fact that the expression immovable property other than plant or machinery is used shows that there could be a plant that is an immovable property also. See, there is an immovable property which is not a plant or machinery, right? So there could be an immovable property, there could be a plant which can still be an immovable property, still when it is plant or machinery, input tax credit is eligible. So in very simple sense, when it is a plant or machinery, input tax credit is eligible. That is what is the interpretation of section 17(5)(d). When it is a plant or machinery, ITC is eligible. So as the word plant is not defined in the CGST Act or the rules framed thereunder, its ordinary meaning in commercial terms will have to be attached to it. So they relied upon various legal decisions. Plant is not defined, so how to understand what is a plant? Old Supreme Court judgment, landmark judgment of the Supreme Court in the case of solid and correct engineering works, they decided when a machinery is fixed on to the earth with nuts and bolts, then is it an immovable property? Was a question. They said when a machinery is fixed onto the earth with nuts and bolts, it can be easily removed. Therefore, it is not immovable property. That is what was the decision in the case of solid and correct engineering works. That decision was discussed. Number two, the case of Taj Mahal, which is an income tax case, sanitary fittings and pipes. Whether is it a plant, they relied upon the Webster's third new international dictionary, where they say plant meaning land, buildings, machinery, apparatus, and fixtures employed in carrying on trade or other industrial business. See, when we talk about plant and machinery, land is excluded, building is excluded, any other civil structure is excluded. That is already a defined term under the CGST Act. But plant is not defined. So we refer to various other judgments and refer to the common trade parlance, which is understood from Webster's dictionary, which goes on to say plant meaning land, building, and machinery. The land building is also covered within the definition of the term plant as per the Webster's third dictionary, and that was what was relied upon in the Taj Mahal Hotel, an old income tax case where they said where they say it is a plant. Then we had the decision of the another Supreme Court judgment, a two-member bench in the case of income tax, a building which is used as a hotel or a cinema theatre. It is either a hotel or a cinema theatre is not a plant. Here the Supreme Court went on to say the building which is used as a hotel or a theatre is not a plant. They said to differentiate a building where for claim of additional depreciation by holding it as a plant, in one case where the building is specially designed and constructed with some special features to attract the customers, and the building not so constructed but used for the same purpose, namely as a hotel or a theatre, would be unreasonable. Therefore, they said a building which is used as a hotel or a cinema theatre is not a plant. That is what was held in the case of Anand Theatres. Two-member bench. Whereas we had the decision of the Karnataka Power Corporation, which is the larger bench, a three-member bench in the case of income tax, where they said, yes, there is the decision of Anand Theatres, but the question to be looked into basically is a question of fact, and where it is found as a fact that the building has been so planned and constructed as to serve and assess these special technical requirements, it will qualify to be treated as a plant for the purposes of investment allowance. So this is an income tax enhanced investment allowance case law, where they said the building was specially constructed for the assessee special technical requirements, therefore it is a plant. In the case of Karnataka Power Corporation, this judgment of the Safari Retreats has relied on all these judgments, and in paragraph 31, they note, we may note here that the decision in the case of Anand Theatres is by a bench of two judges. Thus, the decision of a larger bench, which is a three-member bench in the case of Karnataka Power Corporation, limits the applicability of the decision of Anand Theatres. Anand Theatres, though they have discussed the definition of the word plant, it is restricted only to hotels or cinema theaters. Hotels or cinema theaters is not a plant. Anand Theatres has specifically held, we will respect the decision of Anand Theatres. But whereas Karnataka Power Corporation is a decision of the larger bench, a 3-member bench. Therefore, we will take the decision of the Karnataka Power Corporation. Therefore, the decision in the case of Anand Theatres cannot be applied while considering the question of whether a mall or warehouse or a building which is other than a hotel or a cinema theater can be said to be a plant. Only for cinema theater or a hotel, Anand Theatres will apply. But for all other buildings like mall, warehouse or any other building, we have to rely upon the decision of the Karnataka Power Corporation. So, Karnataka Power Corporation laid down the necessity of the functionality test to say whether the building was so planned and constructed to serve and assess these special technical requirements. That is what was decided in the decision of the Karnataka Power Corporation, and that has been accepted by the Honorable Supreme Court in the case of Safari Retreats, where the court has laid down the functionality test. Sorry. So this court held that whether a building is a plant is a question of fact. It is well settled. I'm not reading from the slide now. It is very clear. If it is a plant, input tax credit is eligible. But what is a building is a question of fact. This court held that if it is found on facts that a building has been so planned and constructed as to serve and assess these special technical requirements, the terminology as used in the Karnataka Power Corporation judgment, it will qualify to be treated as a plant for the purposes of investment allowance. Therefore, the word plant cannot be given the same meaning as given for plant and machinery. Therefore, in a given case, a building can also be treated as a plant. This para 52 is of utmost significance, where they go on to say a building can also be treated as a plant. And therefore, input tax credit would be actually eligible. However, para 53 goes on to say, if the construction of a building is for its own use, input tax credit would not be available. This is an inference which we already made. Para 55 goes on to say, if the building in which the premises are situated qualifies for the definition of plant, ITC can be allowed on goods and services used in setting up the immovable property. Para 56 again goes to say, thus in the facts of the case, we will have to send back the case to the High Court. The Supreme Court did not say here the input tax credit is eligible. They sent back the case to the High Court to decide whether on facts the mall in question satisfies the functionality test. So it can be termed as a plant within the meaning bracketed portion in section 17.5b. The same applies to warehouse or other buildings, but not for hotels and cinema theaters. Hotels and cinema theaters definitely not eligible, but for warehouses, other buildings, mall, we are sending it back to the Honorable High Court to decide whether it is a plant or not. There was also a challenge to the constitutional validity. Para 58, they very clearly goes on to say, there is nothing which is not right. The law, the legislature is empowered to say everything. By no stretch of imagination, 17.5c and 17.5d can be said to be discriminatory. It is not possible for us to accept that it is unconstitutional. Remember, the Orissa High Court very clearly went on to say that 17.5d is unconstitutional. But here in para 60, the Honorable Supreme Court very clearly has laid down The 17.5C and 17.5D are valid, are constitutional. That is very clearly held by the Honorable Supreme Court. As we are upholding the constitutional validity of clauses C and clauses D of section 17.5, its plain interpretation does not lead to any ambiguity. The question of reading down the provisions does not arise. That is what the Honorable High Court of Orissa had done. Now we are not reading down the provisions. We are not doing it at all. They very, very clearly went on to say in para 62, while dealing with the taxing statute, it can always be said that ideally a particular provision ought not to have been incorporated. We can generally say this should not have been there. This should be there. But just because we can say all those things does not make the legal provision unconstitutional. We don't want to impose our views on the legislature. Whatever the legislature has done, 17.5C valid, 17.5D uses the word plant or machinery, which is also deemed to be accepted. Whatever legislature has done is right. We will only interpret what has been given in the legal provision. Even the ASG, the learned ASG, came out to say the wordings, usage of the wordings plant and machinery in 17.5C and the usage of the wordings plant or machinery in 17.5D are one and the same. It is to be read the same. There is a very small mistake. Supreme Court said if it was a mistake, then it is for the legislature to correct it. But we will read only as is given in the law. When coming to the question regarding section 16.4, there is only one paragraph in the entire judgment which talks about section 16.4. They go on to say it is not shown how the provision is arbitrary and discriminatory. The fact that the provisions could have been drafted better or more articulately is not sufficient to attract arbitrariness. The provision is there. The legislature has the power. Just because it is not very clear does not mean it is arbitrary or discriminatory. We don't want to hold anything against section 16.4. Section 16.4 is the legal provision which provides the time limit for claim of input tax credit, which goes on to say now the input tax credit has to be claimed before the 30th of November. So section 16.4, we are not holding anything against it. Section 16.4 is valid. This is one of the passing remarks by the Honorable Supreme Court. 3 questions were framed. There are 3 answers to the same. The challenge to the constitutional validity is not established. Section 17.5C and 17.5D are constitutionally valid. The expression plant or machinery cannot be the same meaning as plant and machinery. Therefore, if it is a plant, even a building could be a plant, and if it satisfies the definition of the word plant, then input tax credit would be eligible. Right? But what is a plant has not been fully said. Even for the appellant, even for the case of safari retreats, para number 66, in light of what we have held above, the writ petitions are remanded to the High Court of Orissa. They have not held that the mall is a plant. It has nowhere been held that the mall is a plant. They have remanded the matter to the High Court of Orissa for the limited purpose of deciding whether, in the facts of the case, the shopping mall is a plant or not. So that is the order for the appellant in generic senses. In a generic sense, while deciding the cases, we cannot make any final adjudication on the question. As a Supreme Court, we decide on a question of law. On a question of law, 17.5C is different, 17.5D is different. Plant or machinery, when it satisfies the definition of plant, then it is eligible, for which you need to apply the functionality test. Now the functionality test will be applied by each officer at the time of adjudication. The taxpayer or the assessee are free to adopt and raise their interpretations at the appropriate proceedings. So as a taxpayer, as an assessee, we will have to make our submissions to say whether this is a plant and how it is going to be interpreted or satisfy the definition of a plant for the eligibility of input tax credit. So therefore, as against the common understanding in social media that a building is eligible for input tax credit. The judgment, we have now deciphered each of the paragraphs to understand very clearly that only and only if it is for other than own account. If it is for my own account, input tax credit not eligible, very clearly held down by the judgment. If it is for other than own account, even if it is a building, when it satisfies the definition of the word plant, then input tax credit is eligible as held by the Honorable Supreme Court in the case of safari retreats. So this is what is our interpretation in this 43rd session of Zen Tax Talks of this beautiful judgment of the Honorable Supreme Court. So now, if there are any judgment, if there are any questions for the audience, we will take it up now. So I hope we made our submissions very clear. We are now open for questions. You can put your questions in the chat box. So, or whatever has been your feedback as well. Your feedback is of utmost importance for us, and your participation, large numbers, has been the motivation for us to keep the session going. Doing this 43rd session for a continuous period of 43 weeks has not been a very simple effort, and our team has been really making it happen. So, so here we have a question to say, can a marriage hall be set as a plant? Right? So, already we have one of the authority for advanced ruling in the case of Varalakshmi Mahal in the state of Tamil Nadu. Varalakshmi Mahal, the authority for advanced ruling, went on to say that in the case of a marriage hall, you will not be eligible for input tax credit. But the order of an authority for advanced ruling is binding only on such assessee and on such departmental authority. So therefore, when we read the interpretation of this judgment, if we are able to satisfy the definition of the word plant, then it would be eligible. Then it would be eligible. But what is the word plant is still really a great subject that is to be really explored. We will have to await the decision of the Honorable Supreme Court of Orissa on whether at all a mall can be considered as a plant. Now, we will raise up various questions before various authorities at the authority for advanced ruling, before the various high courts, to say whether each of these situations will be a plant or not. Can ITC be claimed on construction of a new cinema theatre? Absolutely no, sir. As far as the reading of the Honorable Supreme Court in the case of safari retreats, as it stands today, we will not be eligible to claim input tax credit of construction of a new cinema theatre, because cinema theatre is not a plant, has been very clearly held. Our refund application for 10 lakhs has been. So that is not relevant, sir, for the discussion today. Therefore, I will take it up separately. Supreme Court judgment is prospective or retrospective? Sir, Supreme Court judgment clarifies what is the position of law. Therefore, it is retrospective. If you have already claimed any input tax credit, it will continue to be eligible. But if you have not claimed any input tax credit earlier, you cannot claim it now, because the provisions of section 16(4) would also be in play. So from Asanta Advance
system, a landlord constructs a building at his own cost and lets it to our company for rent. He is registered in GST and charges GST. Fine. So the question for that building construction, can we take? See, that is the issue that we have to wait for the decision of the. Sir, the safari retreats is the same issue, sir. So they are constructing a mall. So similar to mall, you are constructing a building and then you are going to let it out to the parties. So whether ITC can be claimed, the Supreme Court has remanded the matter to the Orissa High Court to decide whether the mall can be considered as a plant. So similarly, we can say whether our rental building can be considered as a plant, then only we can go ahead, sir.
Renu Prabhu, sir, thank you so much for your kind words. Well-defined webinar, sir. This is the first place after the Apex Court verdict dated 3/10. Exactly. So day before yesterday, we had the decision, and today, that is within 48 hours, you conducted this webinar. Well done. Keep it up, sir G. Thank you so much, Renu, sir. Thank you so much for your kind words. I have ITC on building A. Can I adjust this ITC with output payable for building B? Sir, what is that output building A? whether it satisfies the definition of plant is to be established. So we will have to study whether it is definition, whether it satisfies, how it was constructed, whether it was specific for a very purpose, then only we can really think whether it can be eligible. Inputs for materials, labor, works contract bills. Sir, works contract bills is not at all eligible. Works contract bills comes under section 17.5 clause C. Work contract under section 17.5C not at all eligible for input tax credit. Very clearly held by the Honorable Supreme Court also. Only in a situation where it is goods or services received by a taxable person, then only it becomes eligible. So works contract not at all eligible, but for materials, labor, which is charged by the building, yes, if it satisfies the definition of the word plant, then it becomes eligible. Rent on immovable property, mall, hostel can claim ITC. Sir, yet again, yes, sir. The same answer, sir. That is whether it is a plant or not. That answer is still not yet very clear. So we will just have to wait for the order of the Orissa High Court. If there was any ITC eligible in 23-24, as a practical suggestion, you can claim the input tax credit and not utilize it till we get further clarity on the entire subject. Right? Thanks.
Yeah.
Thank you so much for breaking it down so well and explaining it so well. Thank you so much, Rachita Goenka. Thank you so much for being here.
Lift escalator.
Lift and escalators installed, which is going to be sold by the builder. Right? When it is sold by the builder, whether it can satisfy this definition of plant, yes, that it can satisfy the definition of plant. Commercial building, let out GST is paid, whether repairs and maintenance to the above building ITC is allowed.
In our opinion, it is allowed. In our opinion, it is allowed because they use the word capitalized, and also what is capitalized is defined. So only if it is capitalized, you are not eligible. If it is treated as a revenue, it should be eligible.
So two questions. So Govardhan sir and Kamalakannan sir, what is it with respect to own account? So that is also very clearly discussed in the Supreme Court judgment itself. What is own account and what is not own account is also already very clearly defined. So own account in paragraph number 32 of the Supreme Court judgment goes on to say, if it is made for his personal use, then it is own account. If it is used by the person constructing as a setting in which the business is carried out. So for my own business, if I am constructing a building, then also they go on to say it is on my own account. If it is intended to be sold, that is a builder eligible. If it is given on a lease or license, it becomes eligible. So therefore, there is a very very clear distinction. Definitely, there are going to be a very big change. People are going to construct in a separate legal entity, lease it out to another separate legal entity, number one. Number two, works contract services invoices will no more come. Giving to a builder as a single contract, getting everything in a single invoice as a works contract will no more happen because section 17.5C will restrict it completely. People will say, give me invoices for goods, give me invoices for services. I will take the benefit of section 17.5B, let it out on lease. Let it out on lease. So those aspects, the entire dynamics of construction industry, we will have to wait and watch how it will be really progressing with the decision of this Honorable Supreme Court. Thank you, Gordon sir. Thank you, sirs. It was very nicely explained. Thank you, sirs, for your kind words. Manimaran sir, once again, thank you very much for your explanation. So factory building constructed by A company and let it out to B company. Whether B company can claim the ITC. Sivakumar sir, this is again a very beautiful question. So though not relevant to today's discussion, letting out on lease by company A to company B will be the structuring that we would want to do. But there are some decisions of the authority for advanced ruling which go on to say when it is a long-term lease. Say, for example, there are some situations when it is a 50-year lease or a 99-year lease, where they said this 99-year lease, we will not make you eligible for input tax credit. So that is again another contentious subject which is still not yet settled before the Honorable Supreme Court. Only aspect that is now for now settled is when it is a plant, you are eligible for input tax credit. If any difference is involved, if it is a related party, so whenever the transaction is between a related party, you cannot adopt the value as per section 15 of the CGST Act. You need to refer to Rule 27 and Rule 28 of the CGST rules. So to that extent, you need to adopt the open market value or the value of similar goods. That is something which is provided in the valuation rules. That also needs to be followed whenever it is going to be a related party. So there are more questions coming up, but definitely due to paucity of time, we have to close the session over here. Thank you so much, everyone, for your participation in large numbers.
Thank you. Thank you for all your support for till this webinar, the Zen Tax Talk. Hope everybody is getting benefited out of this weekly webinars organized by us. Thanks one and all for your support. Thank you, sir.
So if there are any clarifications, do get in touch with our support team. Our support team number and their email IDs are here available with you. So any clarifications, always get in touch with us. Thank you. Thank you.